Hey guys, happy Friday. All right, part two of the year-end tax strategies. We're now into June. Now is the time to make hay while the sun shines, as they say. All right, general advice pointing, you've seen it before, don't run away and do something. If it's not relevant to you, it might not be worth it. So make sure you give me a call first. Quick recap. Last week we spoke mainly about super, okay? So in any year, you can contribute up to the cap, which is $30,000 this year. If, for example, your employer contributions were $10,000, that means you've got $20,000 $20,000 left to get to that cap from $10,000 to $30,000. If you have available funds, you can make a contribution to super, claim it as a tax deduction, and you're going to get a pretty decent tax refund, and you're going to have a lot of money in super invested for the rest of your working life. So not a bad strategy if that's relevant to you. Second to that, we've got the carry forward concessional contribution. So if you've got less than $500,000 in super, you can carry forward what you didn't contribute over the last 5 years. So let's say in this example here, this person has $102,000 500 available that they didn't carry forward. Okay, so they made these contributions, they had those caps available, meaning they've still got $102,500 left over. So let's say this year you sold an investment property or an asset and you've made a capital gain and you don't really want to pay the tax on it. Well, you can put a big chunk into super because you're able to carry forward those last 5 years. So that's another strategy available to you. And then another one we talked about last week was the non-concessional contribution. So those first two are called concessional. You claim a tax deduction for the contribution. Non-concessional is where you don't claim a tax deduction. So money in super is the most tax-effective way to build wealth in this country. If you've got a decent amount of money, you can put $120,000 a year into super that you don't claim a tax deduction for, but you can also bring forward the next 3 years. So you could bring forward next year, the year after, and then contribute that money into super as well. So it's just another strategy that we can use around the super environment. But what about this week when we run away from super? What else can you do? So it depends if you're in business or if you're an individual. So for example, here we've got 8 different strategies available to you. So for example, number one, bring forward deductible expenses. So if you're an individual and you've got insurance that you can pay now and you get a deduction for it this year. As you see on that slide there, accountant's fees, for example, subscriptions, office supplies. So as an individual, you work on a cash basis, meaning that anytime you spend money, that's when it's deductible. Careful though that you don't go and buy, say, a new laptop, because that's depreciable and you'll only get the days in the year left over for the portion of the year. So you don't get a full deduction for the $3,000 computer. You get to claim depreciation on this portion of the year. So a much higher cost item, which is depreciable, you won't get the impact that you're thinking about. What about bring forward income? Let's say if you've got a little side hustle, okay, and you don't expect your income next year to be as high. How do we do this? No, you expect your income next year to be higher than it is this year. So you might go, I'm going to get some money in this year, so it's not as high next year. So just a strategy around that. On the flip side, defer assessable income. So for example, you might be going, I've earned a lot of money this year. I'm not going to earn as much money next year. I'll wait till next year, as in 1 month away, to get paid that. So another little strategy. If you're a business, let's say you might want to give your staff a year-end bonus, okay? You can do it this year and claim the tax deduction this year. Back to being an individual or a business and you've got some funds that you like to donate. If you donate the money now and it's got to be a registered charity, you claim the deduction now. Okay, so this is all just strategies that you can implement before the 30th of June to take advantage of the tax consequences of the utilization of that money. Instant asset write-off, again, if you're in business, you can claim up to $20,000. So if you've been waiting to get a trailer or a photocopier or whatever it is, and it's a much higher amount of money, up to $20,000. If you purchase it before 30th of June, you can claim that up to $20,000 this year. Above $20,000, it's depreciated. Review and optimize business structure, and then prepay expenses. So again, that's similar to that number one, where an individual might do it. Same thing for a business. Okay, so the whole idea is to utilize the end of the year to take advantage of the tax consequences of the allocation of that money. Whether you spend money now, whether you bring money in now, whether you defer the receipt of money, whatever it is, it's going to have a consequence to the bottom line of your after-tax income. That's all we're talking about. I'll keep it simple. I'll keep it short. If any of this relates to you, you know where to find me. I'd love to hear from you. Hope the end of the financial year goes well for you.